Welcome to this video today, which is all about questions frequently asked on the net, which is how do you trade Forex like the big banks and hedge funds for profit? And yeah, I see that query a lot on the net. And here I'm going to show you how banks and hedge funds make money from the Forex markets. And it's not in the way that many people think. And I'll show you how by doing the opposite you can actually make money, which might sound paradoxical, but it will become more clear as I go through the video. Now let's look at the performance of these banks and hedge funds. And I was reading an interesting book by a guy called Simon Lacker called The Hedge Fund Mirage. And he worked out that if you invested in the average hedge fund back in the early 90s and you did that until today, you'd have actually been better off investing in US T-bills and would have made double the money. So T-bill interest beats the average hedge fund by double. And what's even more staggering is that in his calculation, he omitted all the funds that have gone bust in the period, and there's been quite a few of those. And he also noted how much commission that these funds have made, and it's almost the same as the equity deposited. And it's staggering. Now, if you look at banks, they're going to be the same scenario as hedge funds. They're not there to make money for clients. They're there to make money in commission. Okay, so the performance is very poor. You've got to remember all those glassy offices and multi-million-pound salaries have got to be paid, and it's done out of client equity. Now, obviously, there are a few good funds out there, but as a general rule, most funds have a very, very poor performance. And you might be thinking, well, they've got all this sophisticated technology at their disposal. They should be able to make money. The technology is not used to make money for clients, okay? Because technology, doesn't help a system become more successful. This should be obvious to traders, because if you look at the Forex markets, they're not scientific. There is no hidden order, no hidden secret, no scientific equation. So you can make a system as complicated as you want, and it's not going to make any more money than a simple system. In fact, it will have so many inputs, it will perform worse than a simple system. 90% of traders have always lost money. 30, 40, 50 years ago, they still lose today. All the advances in technology have made no difference. Now, if you look at banks and hedge funds, what they do is they trade very, very short term. They want to be in and out the market, generating fees. And that's what they do. The equity gets eroded over time and the investor loses, and a huge proportion of that client equity is turned into commission. I've actually worked in brokers before. I've seen this happen. It's called churn and burn. It still goes on today, and it'll never change. If you look at the managed fund industry, you do not need to be intimidated by it as an independent Forex trader. You can actually outperform the average hedge fund. All you've got to do is, beat the T-bill interest rate. I mean, that's it, okay? And I know loads of traders who on their own can do this with simple trading systems. And simple trading systems are easy to learn, okay? So anyone can learn one. All you've got to keep in mind is not to trade frequently, so do the opposite of what banks and hedge funds do. Just wait for the high odds opportunities and then trade them. So trade the longer term trends. You obviously need the right mindset, and the right mindset is to trade with discipline. But this actually is something that can be learned by anyone. Discipline comes from confidence in what you're doing. If you've got a simple system you're confident in, you can ride out losing periods, run your winners, and make a great income over time. So when you look next on the CNBC and you see all those clever brokers with all their reports and all that technology at their disposal, just remember what the average performance is of these big funds. It's terrible. Now, back in 1929, there was a guy called Fred Schwed, and he wrote a book called Where Are the Customers' Yachts? And basically the guide takes a group of people to New York Harbor, and the guide just basically goes, there are the bankers and brokers' yachts, all the big yachts. And some guy turns around and goes, well, where are the customers' yachts? Now, nothing has changed. The banks and brokers get rich because they basically delude the public into thinking that they're experts at making money. The performance is terrible. You can do better on your own. Just get a simple system and get the mindset to succeed, and you're all set. You can do it, and you can beat the average hedge fund. Take care. Have a good day. Thank you.